Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. Today, our guest is Jeffery Loyd with Mortgage Acuity. Good morning.
Hey, good morning, Gary. How are you?
I'm doing well. So, Jeff, tell us, how did you get into the mortgage industry?
You know, unlike a couple of the guests on your show, I came to it intentionally. So when I was a kid, my mom was a realtor and a house flipper, and one of her boyfriends was a mortgage loan officer. And they came home, exhausted from work, but still talking shop, which I always thought was kind of cool.
Mm-hmm.
I didn't get into it initially, though. I was in technology for several years. And then when I was searching for a new career, I thought to myself, I should really check out the mortgage business. And I got into it in 2003, and I'm still in it.
Right. So what is it about the mortgage industry that gets you up in the morning, gets you excited to get into the office?
There's a few things. One is I really like the details of the mortgage industry. I like the details of financing the transaction. I'm a little bit more sort of maybe a numbers-based person rather than, loves to see new houses and gets enthralled with real estate, the beauty of homes and cool kitchens and things like that.
Right.
But I do like all aspects of real estate, refinancing home trends, pricing trends. I think it's interesting. And I also like the problem solving part of it.
Right. So, talking about the problem solving, what are some of the problems that you're seeing with that the clients are coming to you and wanting to get mortgages?
I think many clients come with some idea in mind of what they want for home financing. They'll want a 30-year fixed. They'll want a 15-year fixed. They have some notion of how they want to approach it. I think where clients, or what they don't think about necessarily, is how does it fit into their overall goals? How does it fit into the goal for the home, or the goal for the mortgage, or their financial goals? And sometimes we are a little bit more impressed by the idea of paying off our home early, so we think maybe a 15-year fixed and home purchase would be best. Whereas really, maybe there are other financial goals that we want to achieve alongside with equity in our home, and a 30-year might be the better option.
Right.
So how it fits into the full picture.
Right. So, it seems like, lots of times, we've gone through where people got mortgages and they got in way over their head. How has things changed since that, with more of the regulation that's going on in the mortgage industry?
Well, I think one thing that's changed is that there aren't as many products for folks that aren't fully documented, or at least at a prime rate, at the best possible rates. And we're looking more at debt to income ratio. We're looking a lot more at employment longevity and some of those things as we underwrite a loan.
So how has, kind of our pandemic COVID, how has that changed, the mortgage industry and underwriting and things?
Initially, it changed it quite a bit, particularly with self-employed folks.
Mm-hmm.
There was a feeling that self-employed folks, business owners, particularly small business owners, were going to, go out of business.
Sure.
And quickly. And so any small business owners that were looking to refinance were heavily scrutinized. Credit scores were increased dramatically, up to 780 in some cases for a self-employed individual.
Wow.
And that really kind of put a damper on refinance activities for people who might really need it.
What, I've heard that kind of the second home, investment home, mortgages and stuff are changing now also. Can you tell us about that?
Yes. Now, and after fact of the initial COVID guideline changes is now, I think, now this is my thoughts, is that I think the regulators and the industry as a whole is foreseeing more foreclosure activity post-COVID, with second homes. Investment properties are usually the first. They generally have a higher rate of default. And so they have increased pricing. They've basically increased the rates for those types of properties.
Okay. So if somebody is thinking about getting into that, market and want to buy a vacation home or something like that, what would you recommend to them before they just go start looking? I mean, come to you first to figure out what rates are, to make sure that they can afford it?
I think a quick touch as far as what current rates are and whether or not they can afford it is definitely a good idea prior to looking for homes. But I also think that folks should look at some properties at a minimum online, get a feel for what's available, get a feel for what the price points are, get a feel for what the tax rates are, where they want to buy, and just sort of get into the mindset of a second home.
What are some of the questions that that your clients aren't asking you when they come in that you wish that they were?
There's a few questions that I wish they would ask me, or I'd like them to ask me. One is, what commitments do I make to them? My forthrightness, understandable explanations, same day documentation turnaround, things like that, I think are questions that I would want to know as a prospective borrower of my mortgage broker.
Right. Now, you're an owner of the, your company. What is it about, your company that is different from other mortgage brokers?
Time and attention. We have a lot of experience, my partner and I. We've been in the business for about 18 years, but that doesn't speak to everything. And I think it's just more that I like to do loans for individuals. I like the transactions. I like working with clients. I've been in management before. I've run business or, a line of business for large banks. And this is what I like to do. So I think that's what differentiates me, particularly as a broker owner, from other shops.
Right. So what are some of the fears that your clients have coming in, and how do you help them, ease those fears?
Clients like to put their best foot forward. And so that's kind of the easiest way to detect what their fears may be. So sometimes I think largely they're concerned about having enough money for the transaction. Have I saved enough? Have I saved enough for the down payment that I want to put down and closing costs? And will I have enough money behind the purchase to, do some of the stuff I want to do to the house? Get some curtains, maybe recarpet, refinish floors, things like that. And so I think often clients have fear around how much money they have. Usually they know how much they're going to make. Usually they know kind of where they want to buy. I think it's, do I have the money? So
with, going through the pandemic and people, lost jobs, got new jobs, things like that, in credit score, how do you help somebody, kind of navigate those waters that has now decided, okay, I think it's time for me to buy because, I have my job, everything's, good there now. What are some of the things that you try to help them do before they go into a purchase?
Well, certainly we try to stabilize any credit activity. Most mortgage brokers will say, don't buy anything, don't take out a new credit card. I don't so much like to say what you cannot do as opposed to maybe what you can do, but just stabilize the activity. Kind of keep your credit card balances around what you're used to keeping or where they are now. Certainly any new credit items we'll have to take a look at. If you're going to buy a new car, we need to know that that fits into your debt to income ratios and that kind of thing. But mostly just keep on keeping on when it comes to the credit score. We're not going to see a huge raise in credit score depending on when you want to buy. Certainly if you want to buy in the next couple of weeks or month, we're probably not going to see that big raise in credit score. So mostly it's managing expectation.
Gotcha. Now, do you guys work with people on trying to help them repair their credit score? or raise their credit some to be able to, get a better rate?
We do. Yeah, we do. We can offer advice based on what I've seen. Credit is often a bit of a black box, but yes, I've seen hundreds of thousands of not hundreds of thousands, but thousands of reports and over my career, and I've seen what works and kind of what doesn't work. Sometimes it's easy. I helped a dentist raise his score about 80 points with a phone call, just getting one little collection deleted. So sometimes it's easy, sometimes it's a long haul.
Gotcha. So, there's just like in the tax world, there's many online products that are out there and things like that. Why is it that somebody should use a professional like you to help them as compared to using an online service?
Most of the online services have an assembly line process where each individual that you talk to is very siloed. They really kind of do one thing. And so a borrower is passed from person to person to person as they move through the process. For some, actually, that's okay because they'll move right through. But for many, when it comes to a mortgage, when it comes to home financing, a big purchase, a lot of life goals surrounding that purchase, it is a little bit more comfortable to work with somebody where each time they call, they're going to talk to one person. In our case, it's in me.
Right. In that process, because I know from my side of things doing taxes, we get multiple requests for documents, and I know especially during this COVID time and pandemic, I mean, we're getting repeated requests for employment verification and things like that. Is this something because of the pandemic that there's multiple checks of it, or is this something that we're going to see going forward, that this is going to happen more?
In my business, it's been happening really since the financial crisis of 08, 09, that period, where they're always going to want to know that you're still employed right before the closing. So they'll do obviously they'll check income along the way, but 10 days before closing, they'll do a verbal verification of employment. And they may even do it on the day of closing if they feel that that's needed. And so in the mortgage business, there is a lot more of that background checking of employment, credit, and things like that right up to the day of closing often.
Yeah, because I'm even starting to see, even like a couple of weeks after closing, we're getting the call for the employment verification still. And I've never had that before. So it's just,
that would be unusual.
Yeah.
That is unusual.
Yeah. So, obviously in your career, you've dealt with a lot of different issues back when you were doing IT and now with mortgages and stuff. Strictly from a business standpoint, what's some of the best advice somebody's ever given you?
Manage your attention. Most people think of productivity as managing their time. Mm-hmm. And yeah, time management is important. But I think within time management, it's most important to manage my attention. Am I doing what I said I was going to be doing right now? And am I focused on it?
Okay. Can you elaborate on that a little bit more?
Yeah. Well, in this business and my previous business, there's many things that need to be done. So in the mortgage business, you pick up a file and there's a lot of small tasks that need to be done and a couple of larger ones. And I don't like to finish or close that file until I've done everything I can possibly do at that time. And without distraction, without checking email or checking text or, hey, what's going on in social media, or without even I try really hard not to daydream. Just focus on what I'm doing at this time and do this one thing at this time. And that's how I tend to manage my attention.
Okay. So that's really obviously makes you more productive, and it's a better use of your time as compared to, somebody just, picking up and putting down, picking up and putting down.
I think so. It works for me. Also, It's really important when I'm engaging with clients on the phone with them, or if it's a message platform, when I'm engaging with clients, they expect my full attention and they should get it. And that's where it really comes in handy.
Right. Now, at Mortgage Acute, are you guys doing any educational seminars or anything like that to the general public?
Well, we haven't been quite yet, mostly due to the pandemic. I know we could do some stuff on video. So we'll probably start rolling out a little bit of stuff in our community with first-time home buyers. We may do a little bit of some seminars on buying an investment property.
Okay.
And what to look for, sort of the process of going through it, what can you expect, what properties might be good for that kind of thing. And we'll partner with some realtors that have some insight into that. And that's one thing that I've been working on. So I've been writing that up. I've actually been testing it with, I teach English as a second language as a volunteer.
Okay.
And we focus on business English. So I've been practicing with them as a topic, buying investment properties. And they, so far, so good.
That's great. I think that trying to educate people is very important in going through these different processes. Just because I see people, from my side that just get in so far in over their head and then they don't know what to do. And it just kind of paralyzes them.
It's a mindset shift from going from a primary residence owner to an investment property owner. I think one of the biggest aspects is the mindset. It's an investment. Does it cash flow? You're not going to live there. Will people rent it? Does it fit the rental market?
Right.
That kind of thing.
Yeah, and that's where lots of times when I try to counsel, my clients about, getting into the investments and things like that is, are you positive cash flow from day one? And, lots of times they're like, oh, no, I'm not. But, with the tax breaks and everything else, I'll be okay. And it's like, well, lots of times, they don't understand that this is passive income and there's different tax rules with that. And I just always try to tell them, it's like, okay, you're collecting $1,000 a month and it's costing you $1,500. How does that make any sense at all? And just lots of times they just, well, somebody else is paying down the mortgage for me. And it's just like, trying to educate them on that's not always the smart thing to do is pretty difficult at times.
It can be. And I agree with you. Cash flow is the most important thing on an investment property, I think. And if it doesn't cash flow, it's not a good investment.
Right.
And people do talk about appreciation. Well, is it an appreciation play or is it a cash flow play? Cash flow is much more interesting to me.
I agree with you because again, you never know what's going to happen with the market. Is it really going to appreciate or not? Depending on what else is going on in the community. That's true. Now, do you do a lot of things with people that are flipping homes and things like that?
I do some. I do a little bit of lending to home flippers on short-term basis, because they're looking for 3-month, 4-month, 6-month kind of loans. Right. So I'll do a little bit of that. We certainly have the product for that, and some investment. If someone just kind of wants to get into the investment and then maybe renovate it and then do another refinance past that, I'll do that kind of financing as well. I do understand it. I understand the mechanics of it, and can help talk through whether it makes sense on some levels.
Now, is that something that you guys also do, is kind of help counsel them when they come to you about trying to get this, and does it really make sense, for somebody to get into doing it? Because, again, I see a lot of people are doing it and I don't see where they're making any money off of it.
Yes. As a mortgage broker, oddly, I'm probably more often counseling against getting into home flipping than I'm counseling for it. First of all, do you have any kind of construction background?
Right.
That's question one for me. And secondly, do you have what it takes to renovate a house and get it to market fast?
Right.
Super fast, before the financing and the fees and everything else sort of eat up the investment. And a lot of times when you go through the numbers on a house flip, it feels like there should be a lot of money, but there really isn't a lot of money or profit, let's say, at the end of the project.
Right. Right. I think that all of the shows on TV and everything else have made it look so glamorous, and that you can make all this money and stuff like that. And I think that a lot of them are just so misleading, because there's more that lose money than make money.
I agree. It is fun to watch. I will give you that. It is super fun to watch, and I enjoy those shows as well. But they run a different business than a couple of houses at a time.
Right, right. So I mean, I think that's great that you guys, really, don't just, okay, here's your loan. You actually try to counsel them through this to make sure that they're not, making a mistake there.
Yeah.
So what are some of the biggest challenges, that you're facing right now, and how are you guys planning to be able to get around those?
Well, the one that's coming next is the qualified mortgage, or the definition of the qualified mortgage, is going to change. And it's kind of changing now. Fannie and Freddie have said they're going to change on July 1st, whereas the CFPB has said that they'd hold off until next year.
Okay.
And I think in the end, it's just going to cause a little bit of confusion circa July 1st, but it's not going to be a major change overall. It's going to be a bit noisy though. And so right now we're just trying to navigate what really constitutes a qualified mortgage under the new guidelines, what constitutes a qualified mortgage until the new guidelines fully come into play. What does Fred say a qualified mortgage is, and just make sure that anything that any of our prospective buyers will qualify, in what we think the guidelines will be. And that's probably our biggest challenge right now, along with the pricing increases on investment in second homes.
Right, right. So, we've covered a lot of stuff here in a short period of time. What is it that I haven't asked you at this point that you wish I had?
I think the one thing you hadn't asked me was, how do I structure my day? Just kind of nuts and bolts. And I like to work in the mornings on pipeline review, moving the files through the process, working on the business as a whole,
right?
Strategy, vendor reviews, things like that. And then I prospect about midday, say 11 to 3. And then I kind of take a break until about 5, whereas around 5 to 7, 8, I catch up with referral sources, current clients, past clients. I find they're much more receptive to my calls, emails, contact points, a little bit in the early evening, okay, when their day is kind of starting to settle in, than during the busy day.
Right.
That's one thing. That's what I found works. And that's one thing you didn't ask, I guess.
Yeah, no, that's important. I think as a, especially as a business owner, if you don't kind of have that structure, then it's almost like the tail's wagging the dog instead of the other way around.
Yeah, that goes a little bit back to the attention, where I don't want to just keep chasing tasks and feel busy, but not getting anything done.
Right, right. So if our listeners like what they hear and they want to reach out to you and talk to you and get some help from you, how can they reach out to you?
Well, they can certainly connect with me on social media. We have a Facebook page, Mortgage Acuity. They can come to our website, mortgageacuity.com, and at least check our current rates and kind of get a little bit of a feel for who we are and what we do. And certainly they can just call or text me at my phone number, which is 201-500-9650.
Great. Well, Jeff, I really appreciate your time today. Our guest today has been Jeffery Loyd with Mortgage Acuity. Thank you.
Thanks, Gary.
This show has been produced by Market Domination, LLC. To discover how you can have your own show completely done for you and turn it into a real published book and become the authority in your marketplace, go to www.marketdominationllc.com/podcast offer.